Hi, this is Kerry Artek with Wicked Stocks bringing you the daily Apple report for Monday, October 23rd, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. On with the charts. So let's jump into the weekly chart. Big picture, work our way into then the day itself. We have, I'll go all the way back to May when we settled above this 165.74 to 167.15. A descending band of channel resistance, having closed above it, was an indication for a longer term bullish show of force, if you will, anticipating as the longer term objective 229.64. On the way up, we still have 188.10, this weekly channel top that if tested over the next few weeks, and I'm still anticipating that actually above 167.15, can absorb weekly, possibly monthly buying pressures. We could come off of here through November into December, fall off from here again, back into the upper to mid 160s. Within a month or two of testing 188.10, it would be a settlement above 188.10 that would then signal a follow-through buying that should be in a more protracted sense, possibly within 3 to 5 months. I'd say 5 to 8 months at the latest, 229.64. So if, by the end of December, we close above 188.10, by the middle of the year, by the end of the second quarter, 2024, we can push into the upper 220s and climbing, which remains once again a longer-term objective above 167.15. Now, if we were to close the week below 165.74, and that would need to be by a 1% margin. We showed that at 164.08 on the support resistance column. Then over the next, possibly within 3 to 5 months, could take longer, 132.01. So this mid-upper 160s remains a significant pivot region above which we anticipate, not only 188.10 over the next month or two, but the 229.64 area by this point next year. And inversely, once again, if we were to close the week below 165.91, the low 130s expected. So that is the big picture. Now, for the week itself, for the day itself, let's jump to that. I do have 174.98. That is at 50% retracement over the last month or so, last 3 weeks anyway. We closed below that, obviously broke and closed below it on Friday. Now anticipating below 174.98, the 170.61 level. I've reduced this to a session containment level because I think that there's a real clear possibility now that we'll fall into the mid to upper 160s possibly this week. And I also don't like to encourage, aggressive longer term buying, 3 to 5 days, 3 to 5 weeks out. 3 to 5 months out, loading up at 170.61, then loading up again at 167.15, and before you know it, we're trading in the mid 160s, 165.74, and you've been getting long all the way down. What I would like to say is that if we settle today below 170.61, then yes, within a day or two, we should retest that 165.74 to 167.15 region, which is an area that we tested about a month ago, as you recall, and bounced nicely off of it for 3 weeks before falling away over the last week or so. And it may well be in reach again this week if we were to close today below 170.61. 170.61 is considered an intraday target below 174.98. able to contain session weakness. I'm going to call this a solid day trade level. It may also be a 3 to 5 day swing trade level. If we test 170.61, then some variation of this 177.61 formation would be in reach perhaps within several days. So I'm not going to discount the possibility that 170.61 may contain weekly selling pressures. I just want to keep it light here and not encourage longer term buyers to buy into this because it is so close to the mid to upper 160s. I would rather you wait for the possibility of that before entering, a long position that could play out into later November and even well into next year, 165.74 to 167.15. So I don't know. It is certainly possible that if we break 170.61, that we could test 165.74 to 167.15 on an intraday basis. I'll just say that closing below 170.61, we should test 165.74 to 167.15, that long-term support region, Tuesday, Wednesday of this week. Upside, of course, we've got 174.98, able to contain intraday buying pressures. If we happen to push through 174.98, we could, on an intraday basis, test 177.61. Now, the inside channel is 176.40. And so all of the levels that we choose are legitimate trade levels for the day. We just emphasize the more meaningful ones. And once again, pushing or opening above the meaningful 174.98 level will allow 177.61. So, if you buy 170.61 today, if we test that early in the morning on the way back up, 174.98 may be the area to take profits for you. Depends on your trading style. You may then hold out if you're a 3 to 5 day swing trader, as I said, for the more upper 170s approach, 177.61. Now, keep in mind that if we do test 170.61, it does alter the construction of this channel top, but we will be showing it tomorrow, Tuesday. If we happen to test 170.61 today, it would be slightly different. It would be lower in the 175 or 176 handle. But it's 177.61 today. And if we come off of, let's say, Friday's low, and we're trading higher, we open higher, we test 174.98, we back off modestly, we push through 174.98, this 177.61 formation is still legitimate. And if test today can contain session strength, and if we close today above 177.61, I see that as a good low for the week. I see that as a buy signal that should play out over the following 3 to 5 days, by the end of next week at the latest, for the mid 180s. 184.54 is a new rising channel top. So closing above 177.61, I see no good reason to be short this market as we move into later week. 180.42 would be expected actually that would be tomorrow. I don't show them both in the same chart, but if we close today above 170.61, 180.42 is likely tomorrow. That is nothing more than the trend line off these highs that actually did contain buying pressures roughly a week ago. I've reduced it to an intraday resistance level only, in deference to 177.61, which I see as a level not only able to contain daily buying pressures, but if settled above, should pivot the market aggressively north through the rest of the week. The 184.54, 184.71 region then likely, I'm going to say within 3 to 5 days, I think is quite possible, especially if we settle today above 177.61 with that kind of upside volatility. 184.71 is once again the beginning of a range up to 187.85 that can absorb buying on a weekly, possibly monthly basis. And that is the same formation, 187.85, that we find on the weekly chart at 188.10. You can see that upper here. And I don't expect to see that area this week. I will say once again that if we do close today above 177.61, we should see it within a full week of trade, the beginning of it, the 184 handle, 184.71, the beginning of a range up to 187.85 that may well absorb buying through November into December. We could fall off again. And once again, if we close above 187.85, or the weekly version of it, 188.10 at the end of a week, then I do see longer-term bullish continuation, a resumption of a meaningful move that should, within 3 to 5 months, perhaps reach that 229.64. Now for the downside, as I said earlier, if we close today below 170.61, we should tomorrow test 165.74 to 167.15, where if you're short, I see no good reason to stay short in this zone, as we could bottom out here, not only for the week, but even well into next year, as I outlined earlier. And finally, and it's not going to happen today, but later in the week, on Friday, if we do happen to settle below 165.91 by the required 1% margin, and I'll show that down here, that would be a Friday settlement of 164.08 or lower, 1% violation of this inside channel. This market takes on a continued weakness as we move through the rest of the year and into the first quarter, the following 3 to 5 months, then in reach of this 132.01 channel bottom that is based on the series, these two highs going back almost a year, January of 22, the intermediate low. This is a significant support structure that may, if tested, say by the end of Q1, contain selling through all of the balance of 2024. And that, I think, is really all that needs to be said. I think I outlined everything pretty well. I will leave you with this image, the most appropriate for the day as we come into Monday. I'll be back, of course, tomorrow with Tuesdays. Please click like, share, subscribe, and check out wickedstocks.com. I'll be back tomorrow with Tuesday's Apple.